We are in the middle of an inflationary crisis. And what is the Federal Reserve going to do? I'll let you guess. That's right, pour gasoline on it. How does that sound? Probably not so good, especially for your savings. Well, in today's video, we are going to talk about what has happened up until this point and the crisis we are facing today. Of course, as always, I want to highlight the takeaways that you can use to make this information relevant to you. So let's begin by looking at this article. Fed rate puzzle gets final inflation, retail pieces. The Federal Reserve is raising interest rates to combat inflation, and there's uncertainty about the effectiveness of the Fed's policies because things are still running so hot, even though they've brought interest rates up, right? The economy is experiencing significant pressure coming from inflation, and yet right now, because of what's happened with SVB, they kind of have this pressure on them that, hey, wait a minute, you're not gonna keep increasing rates, right? Think about how they're fanning the flames of inflation during this time. And yeah, you could argue they're backed into a corner, but is this a wise policy to follow? I really don't think so. And that's where we're headed regardless. Here we have it. Fed flies blind on monetary policy with rising risk of a 6% rate. When you look at the inflation rate coming in at 6%, they've told us that this is in line with expectation. And so that's all fine and dandy. Well, the Federal Reserve's policies are uncertain and could have negative consequences. And the reason this is because we're at the point at which it can go in either direction. Very concerning that an inflation rate of 6% is no longer a concern for many investors because they're saying, don't worry about that. Just print a lot of money and backstop any potential losses right now, today. Big problems, okay? The Fed's action may be causing more harm than good, if you think about it, because they're actually pouring gasoline on this fire. This was an article basically just talking about the different phases of hyperinflation according to the IMF. And I've studied this before in the past, and I'm sure you have as well. But ultimately, I think what we're not looking at is in the case of Argentina, where inflation rates get much worse than anybody anticipated. Right now, inflation in Argentina is at 100%. And just a few years ago, you would have considered that to be crazy. In fact, there are many comments saying, this guy doesn't know what he's talking about. I warned about that before, because once inflation takes hold, it never really goes away. Now, of course, Argentina is not the US, though at one point it was extremely powerful. A lot has changed over the years. But you got to understand how a hyperinflation happens. Hyperinflation can cause significant economic damage and suffering. It's important to understand the root causes of inflation to prevent hyperinflation from happening. That can come from the government and their stimulus programs. They're trying to fund something, they're trying to subsidize something, and then it gets worse because you can never pump in less money than you did before. It always has to be more. And so that becomes a real bad cycle. Just like when they're printing money, quantitative easing, and so on, you devalue the currency. So the central bank ends up screwing things up too. There could be many other factors here, but always understanding where we came in the first place, not in the previous, like who was the previous president. Oh, let's blame that person, or let's blame the next president. Oh yeah, it hasn't even happened yet. We're gonna blame that one. You can't do that. You need to look at the policies of the stimulus measures. You got to understand what's happening with the central banks, even more importantly, and that tells us where we are heading, okay? Now, I focus on what happens, in my opinion, with, just look at this. The budget that they're proposing right now pushes to renew bigger child tax credit payments for families. Now, that's great if you're in that position. But understand who pays for this. The government overall has to be funded by the taxpayer. And what I tend to find is that individuals are paying already too high of tax and not getting enough in return. We're not getting enough from all of this? Do you find that? Or do you think that you are, in fact, getting a lot? Look at your infrastructure. Are your roads and bridges and highways and infrastructure in general, okay, even, the technological infrastructure, is it up to par? Do you feel that where you live? Some people say no. Some people say, yes, it is. Really depends on where, but I've shown the charts before and it is bad. Just to see how many different important pieces of infrastructure are like in terrible shape. And that shows us, in fact, that our tax policies are truly, at this time, truly in a bad spot. Like it doesn't make sense. They're going to put these tax, they're going to give you money here and there. Ultimately, it is leading towards universal basic income. And that would be, celebrated by some people, but I think it's got its own inherent problems. And giving out that money is going to make things worse very rapidly. That's the way I see it. I've studied this before. Look at the policies of countries around the world that have tried to do things like this. And I would argue that it's actually going to make things worse. You let me know. You think it's going to make things better? Please post it in the comments. Let's talk about that. And by the way, I'm not saying anything about, the troubles that people are encountering. They need some fun. I'm not saying that. People need help today. There's over 40 million people on food stamps. So yes, people do need help. But the way they go about it is terrible because only a penny of that dollar, that's just me making a number up, but literally pennies actually go to what you think they do. Is that a very good use of your hard-earned savings? I would argue no. Big Short, Michael Burry warns of another major bank collapse. I showed you this before, but essentially just talking about the fact that what we saw with SVB and Signature, these two, the second and third biggest bank failures in history, don't just go unnoticed. And that's all because of what's happening with the central banks and what they're doing, okay? Is my money safe in the bank during a depression? And a lot of people don't realize this, and I'm going to make an entire video about it, in fact. But right now, we can, assume that what the Federal Reserve and the FDIC and the Treasury, they've all come out and basically said, all deposits, not just the 250 and below, all deposits will be backstopped by the government. Anything happens to that company, you don't have to worry. Now, could there be a bank bail-in? That's possible. All the G20 nations signed on to that. But I would be very concerned to have savings in a bank in the first place because it's eroding in value every single day. And that's what I'd be concerned about. What do I do about that? I'll answer that in a future video. If you subscribe to the channel, I'll bring that up. I've done videos about it before and I have it in my books and so on. But I think it's important that I really just take the time to do a new video and break down what people should be doing with their savings depending on what their personal circumstances, because it really depends on you, okay? Here we have it. Manhattan apartment hunters see no relief from near record rents. The prices are going up still today. Can you believe it? How is this possible? They're paying more for just about everything, and yet we see it here going on right now. The high cost of housing may further exacerbate economic inequality and hardship for many individuals because if you're living on billionaires' row, it really doesn't matter if the price has gone up. You're going to be able to afford it. It's not a big deal. It's just a little bit of a percentage off from what you've got. But if you're at that point where, if you barely make ends meet and suddenly the cost is $50 higher a month, that's it. That's enough to break you. For a lot of people, that's the circumstance we're in right now. And if they don't get inflation under control by increasing interest rates and stopping all the money printing and, if something is supposed to fail, to actually let it fail, not necessarily SVB, but just in general, we have a problem, a big problem. We believe that the 2023 bar is low enough and expect the company to benefit from the cyclical tailwinds and aggressive cost cuts. This is basically just talking about Intel and this one company thinking that they're going to cut costs by laying people off, and that is going to be able to push the company higher. Once again, just trying to highlight what companies are doing as a result of things like the increasing interest rates and the general slowdown and recessionary vibe that we're getting globally. So that means the takeaway is that you as an individual, if you're working for one of these companies or in the same industries that we're watching the haircuts come from, you got to realize that your job, even if you think it's safe and sound, it's more and more obvious that we need to have a second stream of income, and we need to geographically diversify where our income comes from. I talk about that somewhat in the Pillars of Prosperity video, if you want to check that out. But I just believe for a lot of people today, they're just not prepared. And that's what it comes down to. And we see that time and time again. Look at this. GM is batting down the hatches and cutting employees to save costs. Are you seeing a pattern here? So many different companies in different industries are getting rid of people. Yes, they've been expanding in the years prior, but this is just one example of a company doing this. GM, Intel, I mean, all over the place. It's not just one company or another. And for different reasons, really, too. Different reasons. One company saying, hey, we're going to build more electric vehicles. Electric vehicles need less parts overall, so therefore we can cut a bunch of people because there's less moving parts involved here. That's just one example. I think it was Europe I saw that in. Bank of America has the biggest losses in the bond portfolio among its peers. So there is a concern right now with Bank of America. However, comparing them to, SVB, Silicon Valley Bank, I don't think that's fair. But understand that these companies here, despite how massive they can be, they could still have problems. And you might say, if Bank of America fails, they'll be nationalized. So there's no reason to worry. I would tell you that Bank of America failing, they will probably be nationalized, bailed out, something. But that just shifts the burden from the shareholder onto you. Why in the world are people celebrating this? It's beyond imagination that you would celebrate a bailout. You have to learn to get burned. If you touch the stove as a kid, you realize very fast why you shouldn't touch that stove. Do you need to put a big fence in the way? Do you need to put, laser beams and, a siren goes off if you start getting close to that? Or do you just need to get burned? And I know I'm making an example here. But a lot of people don't want that. They want to walk around their lives with, padded walls and helmets on so that they don't get hurt ever. But what in the end, what happens is they end up going too risky and they lose everything. How many times do people with what seems like gigantic sums of wealth burn it all? It really does happen, especially when they've been given that. They just won the lottery. They've just, they suddenly got this big stock that changed their lives because they picked the right thing at the right time. All these different things. Watch out very carefully. I think a lot of people are walking into a brick wall. That's just the way I see it. Right now, we've got to take control of our finances. We've got to be careful at what we do with our, where we're keeping our capital, where we're keeping our savings. And that's something that, I will be bringing up in a video in the coming days. Please stay tuned for that. I'm going to show you what you need to do. If you're not already, hey, let me give you a hint. Real assets is part of that. Because of all these things, they're laying people off. How do you know you're not going to be next? I hope not. I really don't. But this is the way it goes. Okay, I've heard of so many people just recently that I personally am aware of that they were working at these companies for 10, 15, even 20 years. And even sometimes it's kind of like, we kind of want you to quit. We're done here. And that person doesn't want to quit. okay? But they want them to be just let go. Here, we're going to give you a severance on the way out. It's time for you to go. They need to reduce their headcounts. There's a lot of mergers and acquisitions that are going to take place already, but more of them will take place. And this is a time that becomes incredibly precarious, because what does that say about the economy and the strength of the financial system? So, hope you appreciate this information. Stay tuned for that video that I'll do. Hit subscribe so you get notified of that, and I'll see you tomorrow. Take care.